Financial Reporting Through the Lens of a Property Casualty Actuary. Part 1, Introduction. Chapter 2, Relevance of Financial Reporting to the Actuary. Importance and Objectives of Financial Reporting. Actuaries estimate the financial impact of insurable events. As such, actuaries need to understand the accounting rules under which the financial impact is being reported. Consider the actuary providing an estimate of an insurance company's unpaid claims for purposes of comparison to recorded loss reserves on the company's balance sheet. If the balance sheet is prepared under statutory accounting principles, SAP, then the loss reserves are recorded on a net of reinsurance basis. If the company's financial statements are prepared under generally accepted accounting principles, GAAP, then the loss reserves are recorded gross of reinsurance. For comparison purposes, the actuarial estimate of unpaid claims would need to be prepared on a net basis for SAP and a gross basis for GAAP. The actuary might also provide an estimate of unpaid claims ceded to the company's reinsurers for comparison to the reinsurance recoverable amount recorded as an asset on a GAAP basis. Actuaries providing estimates of unpaid claims on an SAP basis must also be aware of state regulations under which the company is recording its loss reserves. For example, while the National Association of Insurance Commissioners' Accounting Practices and Procedures Manual permits companies to discount workers' compensation reserves on a tabular basis, certain states have varying requirements with respect to whether and how the tabular discount is applied. For instance, as of December 31st, 2018, the state of Montana permitted discounting of both workers' compensation indemnity and medical tabular reserves, excluding LAE, but required use of a specific interest rate in the calculation, 4%. To take this one step further, actuaries issuing statements of actuarial opinion should include a statement within the opinion stating that the company's recorded loss and loss adjustment expense reserves meet the requirements of the insurance laws of state of domicile. The opining actuary is therefore required to read the state regulations and confirm that the recorded reserves meet the state laws. The accounting convention is not only important to the reserving actuary for an insurance company, but also to actuaries who perform other jobs, including but not limited to the following: working with regulators to monitor the financial health of insurance companies, pricing and designing insurance products, including development of profit margins, determining capital requirements to support the various risks of an insurer, evaluating risk transfer of reinsurance contracts, assessing reserve adequacy for non-insurance entities, such as organizations that self-insure or retain a portion of their property casualty insurance exposures, preparing tax returns, appraising and valuing insurance companies in merger and acquisitions. For each of the above, the result of the work performed will differ depending on the accounting framework used, illustrating the need for actuaries in different disciplines to be knowledgeable about the various accounting and financial reporting frameworks.